trading a Robinhood account from $3,000 all the way to $1 million and showing you every step of the way how I get there. As of Friday, October 17th, we closed the account at $29,511. We were down $1,000 on the week. At one point, we were actually starting to climb back towards 35K. We topped out around 38, 39K earlier this month. We are still down relative to the peak in the portfolio, and that's just due to all the volatility that's going on right now in the market. And so in this video, I am going to cover what I think is going to happen here. We do have some newer developments over the weekend. We'll go into that around trade and Trump and tariffs. We also have the government shutdown that's still going on, as well as there were some signs of maybe credit strains in the system, mostly isolated to regional banks. And so there's been a lot of volatility. VIX was jumping up over 20-30%, and the market has been very volatile, especially among a lot of these more speculative, smaller cap growth stocks. Like you saw, Hims and Hers Health had a really large swing to the upside, and then it broke down on Friday. Snapchat is not able to find some ground. Even nbis sold off on Friday, but that was mostly due to a lot of options that were expiring on Friday. And then of course, like, we're still long Amazon, Neo, Grab. There's some newer positions in the account. So we're gonna get into the charts and go through all of those. But if you haven't already, I am going to be announcing a giveaway. If you want to join the Discord, I do post not only all of the entries and exits in the Robinhood Challenge account, but also my main portfolio, as well as like trade setups. I break down some of the different catalysts, the fundamental or even just technical analysis on all of these stocks, just to give you guys a better idea of what my thinking is as to why I'm entering into the trade. And then of course, we are going to be doing this giveaway. We hit 1,500 subs last week. When we hit 500, we did a Keychron Q5 Pro mechanical keyboard, but this time we are going to be doing multiple gifts, so multiple winners. There will be a main prize. I think I'm going to do a 32-inch monitor, as well as probably some gift cards for like TradingView. We might even do a desktop ticker, where it's like a little device that you can actually have physically on your desk that shows the current price of a stock of your choice. So just some really cool gift ideas that people suggested, and we'll probably do about maybe 3 or 4 gifts at 1,500 subs. So I'm going to announce that very soon, and then you'll be able to enter, and that'll be completely randomized. And then we'll do another giveaway at 5,000, and I kind of want to scale up the different gifts that we'll be giving away as we hit certain milestones on the YouTube channel. So really appreciate your guys' support. Plus there's over 1,000 people in here now, pretty crazy. But looking at like some news here over the weekend, they are going to be rolling back some of the tariffs from Trump. And I really think this was by design. Anything that we can't produce here locally in the US, like, there's no point in really tariffing those heavily. And so Trump kind of just used the shotgun approach, tariffing everyone at the same time as leverage in those negotiations. Now, of course, the market has been very volatile. The VIX has jumped quite a bit. It's still hovering over 20, which is still really high. That implies like a 1.2, 1.3% move daily on the SPX. So really going to see still a lot of movement here over the next couple weeks. But we are going into a lower rate environment. They are starting to ease the tightening process that they've had on markets for a period of time to lower inflation. And so in October, it is now fully priced in. You can see here, 95% chance of a 25 basis point cut, and even a 5% chance of a 50 basis point cut in October. And then we'll most likely have another 25 basis points in December, with a potential for 75 basis points in totality by the end of the year. So I think that's really bullish for the market. We are starting to see some credit cracks. Jamie Dimon was calling it cockroaches. Once you see one, there's usually more. But it does seem quite isolated. Like Zion Bank had one. Then we had like a $50 million loss with Zion Bank, a write-off. And then JP Morgan was also victim to Tricolor Auto, which was just kind of like double dipping loans and giving out auto loans without driver licenses and things like that. And so there was some stresses there. Even AutoNation is starting to report negative free cash flow. The last time that happened was a little bit before late 2008, 2009. So, who knows what's coming. I do think at some point we are going to have a credit event. There will be a bust that happens even with them lowering rates. But I think that could be put off. We have midterm elections next year. So there's like a lot of bullish seasonality going into year end as well as the middle of next year. But I think within the next 6 to 12 months, it will be a good idea to be very cautious, very risk off. We're going into that soft landing narrative of lower rates. And I think nobody's going to be looking at the fact that once there are some credit cracks, there's probably going to be larger ones down the road, mortgages, auto loans. There's, I think, over 37 trillion now US debt, but globally it's over 300 trillion in debt. And I think relative to GDP, it's like 330% of global GDP. So if there ever is a credit event, it's going to be very, very difficult for the Fed and other central banks to not just print into all that deflation, because if they don't, then things are going to be much, much worse in the economy. And then they'll have to do more bailouts, QE, fiscal stimulus, and all of those things, which, we're probably going to head towards again sometime next year. And who knows what the catalyst will be, but I'm almost certain that we will see that at some point. But usually in these late stage melt ups in this cycle, we're going to have some sort of a parabolic move, most likely over 700 SPY by late this year, maybe even early next year. I'm still very bullish. I think a lot of the volatility that we've been seeing here over the last week and a half is just kind of like a shakeout. There is a lot of liquidity or a lot of leverage traders on margin in crypto. Speculative stocks have been running up in quantum and nuclear and other futuristic speculative sectors. So really, really interesting time to be in the markets. But as far as just like looking at the S&P 500, you can see how volatile it's been this week. A lot of people got shaken out, especially in crypto. But this was when the tariffs were announced on China. We did actually break down below this more recent uptrend that you're seeing here. And then we bounced back over, which is really good sign. We came back down and retested that level, and then we bounced once more. But this is, somewhat of like a bear flag that is forming, right? You have that flagpole, you see this uptrend that's happening, and then you have this breakdown. And that's what we actually saw here on Wednesday going into Thursday, and then even on Friday, like very, very early on Friday, 2 a.m., the market was actually breaking down below that level again. And because VIX was trading over 23, 24, I think it was even actually 25 at one point. No, it actually got even higher than that, around 29. And it's had this really big drawdown. That's pretty common because volatility is very difficult to sustain for a long period of time. And then what happened, the market had a counter rally trend, and we actually closed back inside of this channel, which is very bullish, right? So we've kind of had like two false breakdowns here on this uptrend, and now we are trying to hold above. We could certainly try to come back down here and retest this level. Crypto is starting to hold and even stabilize, which is a good sign. So, there could be some volatility just depending around what the headlines are with Trump, China, Bessent saying he hates the Chinese negotiators and things like that. Like, we could still see a lot of volatility around headlines, but I think all of that's going to be washed out before the end of October, early November, and then we are going to bounce and start to have another rally into year end. That's pretty typical with most trade wars, and this is really just a rehash of April, and it's mostly just isolated with China, and both sides have a lot to lose if they don't want to do trade with each other. So I think this is mostly just like a bit of a posturing exercise between the countries, and ultimately the VIX is going to wash out and the market is going to grind higher. Maybe we get a bit more of a dip, so we'll see what happens there. But I think if you're playing options, you'll want to be focused mainly on like 2026 expirations. And then once the coast is clear, maybe the market's starting to rally, then you buy the shorter dated contracts, which could give you a greater return on your positions. It's much better to be safe than sorry, especially with options, just how premiums move. Like you can see how much the account has dropped just with 1 week of volatility, and we're only like 1.5% off all-time highs. And like the same kind of patterns playing out on tech and SPY and even the Russell, which is very volatile, but I think small caps are going to do really well as the rates are lowered. Real estate could do well, home builders could do well. I think like silver and gold need to slow down a little bit. That would actually be bullish for equities and crypto. You can see that Bitcoin is actually starting to break out of that downtrend. Usually when you have like this big capitulation move, people try to buy the dip a bit early and then they get dumped on, they buy again, they get dumped on. Even people in here were leveraging crypto again and then getting dumped on once more. Once you have that lower low, right? You have that first low, a lower low, and then what you're trying to accomplish is like a higher high to break that downtrend. And we're kind of seeing that now with Bitcoin. This 109.3 thousand, like 109,300 level has been a pretty key level. Like you can see where it's traded in the past. And so that's like a flip point for Bitcoin. So we really want to see it hold above that level and then break back over this previous breakout trend and then start to continue higher. But I do think crypto will do well as the rates get lowered and a lot of the uncertainty around trade resolves itself here over the coming weeks. And even Ethereum kind of in a similar pattern here as well. I know Tom Lee has a very bullish expectation that he thinks 10 to 12,000 will trade by the end of the year. That is absolutely insane. I don't think that is going to happen. I mean, maybe best case we get to like 6 to even 6.8K on a really strong breakout. If we're going to go to 8, 9, 10,000, that's more than likely going to take several more months for that to actually happen. So that's kind of what's going on with the market right now. I'm just kind of sitting tight in my positions and holding through all the pain and just hoping for the best, right? Like most of my positions are further out. And then we also have earnings coming up over the next couple weeks here for most of my positions. And I think, that could be bullish, but we'll really find out here soon. We got like Tesla coming up this week, as well as I think Coca-Cola, which could influence Target, like some of these smaller caps. We also have some healthcare reporting. I think Meta as well. So there's a lot of earnings on the menu this week. And then the week after, we do have the FOMC. So really exciting times to see how things play out. But let's just get into the list of all the stocks that I have here that I want to cover and give you ideas of what I think is going to happen. Now, I do still have some Apple call spreads in the account that I'm just waiting for max profit on. So Apple, I do think, is going to ultimately break out of this all-time high. They just are notoriously buying back shares of their company. Obviously, they're designing the new M6 chip, releasing the iPad. They just partnered with F1, a couple $100 million deal. I don't know what it is with Tim Cook, but he's just absolutely obsessed with Formula One. And so, Apple was actually forming a bit of a bear flag, right? Like you had this flagpole and then it was this little sideways uptrend here. We actually broke down intraday, but then with the deal, we actually closed back above that. So that's actually pretty bullish. We held this 247 line. We filled this previous gap that you're seeing here, right? So we came down and we were able to hold that previous bull gap, and so that area is acting as support. This is a bit of like a gap fill reversal that's happening here, and now we're pushing out of it. So as long as we continue higher here and try to break over this upper trend line, it's more than likely that Apple's going to retest that 260 area and try to get through that all-time high resistance and probably push towards 270. which I think it will do just because the market is more than likely to recover and volatility has to unwind itself, which is going to be bullish for equities. Now, AMD did have the big OpenAI deal. They are starting to accelerate their growth, a lot of forward revenue. It's more than likely that they could post over 100% growth for next year. So I'm actually very, very bullish. You know, they're doing about 20 to 35, 36% revenue quarter over quarter, and that's going to accelerate to over 100%. Now, NVIDIA's obviously the tier one chip maker, but AMD is very cost effective and good at inference, and computing on the edge is going to be, you know, where AMD most likely wins. Now, NVIDIA is not slowing down. I think NVIDIA is still also a great buy, even with the fact that they are now not in China whatsoever. I do think if you're looking to buy either AMD or NVIDIA, I think AMD is the solid choice just because relative market cap, it's 378 billion versus almost 5 trillion for NVIDIA now. And I think that AMD down the road is going to be closer to at least $1 trillion market cap. So if you're looking to buy a stock long term, I think AMD is such a great company, as well as Lisa Su's been very active in the news as of late and partnering with like Sam and OpenAI. These are all just solidifying AMD's business model. We have this huge gap here that exists now. So that area is going to act as support. If for some reason there's ever like a market crash and we filled this gap down, it would be like the best buy in history to buy down there just because of all the forward revenue that they're going to receive through all these deals that they're signing. So really, really bullish on AMD. I definitely think like a move to 260 to 280 in Q1 is possible. Even up to 300 is very likely sometime in the first half of 2026. But really what I want to talk about the most, and probably what you're waiting for in this video, is nbis. nbis had this, you know, Microsoft $17.4 to $19.4 billion 5-year contract that was signed, which solidifies them as probably the go-to greenfield data AI center build-out company in the whole world. And so I think that nbis, really just from the ground up, is probably the best company in this neo cloud, like all-out data infrastructure play. It is like the safest in my mind. I think it is the gold standard. Rockstar CEO. They obviously are minted now by the Microsoft deal, and then they also do have land in Alabama. And I think it's more than likely, the more research that I do, that nbis will most likely have another deal with Microsoft. Microsoft had news recently with Azure that they're turning away customers because they don't have enough capacity, right? So they signed this deal with nbis. They're funneling their CapEx through a very specialized technical company that's able to build these data centers within 12 to 18 months, whereas hyperscalers are actually slower. It takes them 24 to 36 months for a greenfield location to be built. And so not only do they have the technical expertise and the software, you know, everything that goes into this very complicated process to build out a data center, nbis has the headcount, the engineers. They're trying to hire over 150 people on their careers page. They are in all-out growth mode right now. They have a ton of forward revenue. They're only trading at 28.5 billion market cap after the big sell-off on Friday, which is mainly due to the fact that a bunch of people were buying out the money October 17th expiration contracts. And as this dilution level that we talked about, the convertible notes that were diluting at around $138 a share was going to act as resistance. What happened? We got to 141. We started to break this uptrend, and then we had a big capitulation on option expiration because all the dealer head shares are unwound as expiration approaches, as well as a lot of people were actually selling puts, which also amplifies the downside move. So you saw here on Friday, you know, we had the big gap down, and then it kind of just like pinned itself into this 113, 113.50 level. Really would like to see it get back over 114.71. That's like a bit of a level here. Obviously, there's not as much volume and price discovery in these ranges, but ultimately, Nebius by the end of this year, early next year, is probably going to be trading a lot closer to $200. And if they announce any sort of tack-on, add-on deal with Microsoft, or even potentially with Oracle. Oracle has that $500 billion Stargate project to build data infrastructure across the US with OpenAI and a few other partners. If they are maybe expanding out of, like right now that's mostly in Texas, but it would make sense for them to diversify their footprint into a location like Alabama, which is lower energy costs, as well as, you know, the power grid is you know, it's a less populated area, right? So it's easier to power something in Alabama. And then of course, like disaster relief and things like that. So like right now, Microsoft is in Vineland. That's like the deal that they're building in New Jersey. So it would make sense also for either Oracle or Microsoft to diversify their footprint into Alabama. And it's much easier to fit racks into Alabama as opposed to Vineland, because this is kind of constrained to like 300 to 400 megawatts, just due to the fact of like the power grid, zoning restrictions, cooling infrastructure, all the things that go into the data center build. So really, really bullish on Nebius. If I had to give it a target just off of today's valuation, like the buildup of its subsidiaries, it has ClickHouse. And actually, I can show you here on, I have a couple different things here pulled up about Nebius, right? So let's see. So this is kind of like the total picture of Nebius, right? You can see the ClickHouse one is like the biggest catalyst, I think, of one of its subsidiaries outside of its core business. So on the far left, ClickHouse, they have 28% stake in this, and it's really just like a data warehouse. It's an OLAP, which is an online analytics processor. So it's kind of like Snowflake in that sense, and really what it is just like an analytics tool to analyze the data that's coming out of these AI data centers, right? So they need to analyze like how it's actually performing and all of those things. And they have companies like Tesla, Uber, Cloudflare, Mercado Libre. So it's already doing very, very well. It's most likely going to IPO anywhere from $5 to $8 billion, and they own 30% of that company. Now, AV Ride is now partnering with Uber. You can see here with Hyundai as well, and that's just autonomous vehicles. Toloka's data processing, that has ties to Amazon, which Bezos Expedition. So maybe there could be an Amazon deal. That's probably a bit less likely since Amazon actually likes to build most of their data infrastructures in-house. And then of course, like the core business here, right? They're gonna most likely have another hyperscaler deal. That's what really is gonna be the next catalyst to catapult this stock. Right now it's worth probably 200 plus, but with another deal, it could easily push over 300 by the end of next year. So very, very bullish on Nebius. Here's a bunch of catalysts. This is a good account to follow about Nebius. Obviously the announcement of Alabama, whatever that greenfield site could be. If they raise their guidance for next year, right now it's anywhere between like $4 to $6 billion in ARR for the core business. And then ClickHouse, if that increases, that's going to be great for Nebius. Increased institutional ownership. I think at some point Nebius will get added, of course, to like S&P 500 or the NASDAQ, all the passive flows that could actually flow into that. So this is a very long-term play that I'm looking at. I have a lot of shares. I have contracts. I am playing out the money calls. Some more I already took profit on in October for like over 500%. And then the other ones are still over 100%, even with the drop off that happened, just because we had such good entries. But overall, I'm just very, very bullish on Nebius. Even ClickHouse, the CEO there, like this company is accelerating as well. And of course, Nebius is going to benefit from that. So overall here, like you can see, this is such a great play just with all the forward revenue that they're going to expect. Nebius is actually only behind EOSE, funny enough, but this is a much smaller company in that sense. And of course, one of the Nebius people they're looking for animation for a cool launch. So who knows exactly what that is? I would imagine it's probably something smaller. But if something happens there somewhat soon, it could be a catalyst for that stock to start breaking through that dilution level at 138, which I think it will by the end of the year. I think we're going to be trading at least over 150, probably closer to 200 by the end of the year or early in Q1. Obviously, hedge yourself. Who knows what could happen with anything in the market, so you always want to hedge as much as possible, hedge your risk. It's better to be safe than sorry. So that's what's going on with Next up, I do want to cover Amazon. I am extremely bullish on Amazon. It is trading very, very low relative to its historical means. A lot has changed for this company, and it's really not all that much higher compared to all the other Mag 7 stocks. It did have that rally off the April lows. It is starting to form a bit of a falling wedge in the more recent trend. It did come back down to this gap that still exists at $211 per share. So really what we're looking to see here is to hold that lower trend line and start to bounce out of here, get over that 216 level, try to break through this downtrend on the upper trend line that you're seeing here, and then get through some of these levels, right? Like we were starting to break out. The Trump news crushed it just because people think like Amazon has the most exposure to any tariffs around China. That's where they source their products for retail. But Amazon has its hands in so many other things. The really big thing for earnings, which is happening at the end of this month, is AWS growth. Right now, they are the market leader, like around 30%, I believe. Azure is starting to catch up just because of ChatGPT, OpenAI. But AWS is more than likely to see more than 20% growth on earnings, and hopefully they can guide a bit higher. They're also starting to dabble into nuclear, small nuclear reactors. So there's some catalyst there. Obviously, robotics is a big thing right now. And then, AI, like nbis, you have to have all the infrastructure, all the compute to actually power all of these futuristic things, right? That's the bedrock of everything. So really bullish here on Amazon and nbis. AWS, obviously like data, hosting, storage, but now AI compute is a very big growth driver here, especially around Anthropic's Claude, Perplexity. So I think there's a lot of catalysts here to see a really good growth number print out on Q3 as well as forward guidance. Jassy, the CEO that everyone hates, has really dropped the ball especially in Q2 earnings. Like they blew it out, but it sold off. And I think that in Q3, he's not going to make the same mistake here. They're going to talk a lot about like robotics, maybe nuclear. AWS growth is going to be a big thing. Like AI is the main driver of GDP and pretty much everything in the economy right now. All the infrastructure, all the CapEx is trying to be thrown at AI. So Amazon is going to be a benefactor of all those things. And I think that Amazon into the end of the year, especially if earnings go well, we could definitely see like a move all the way back to retrace that earnings, like from where we are now, right? We dropped down from around 235 to 211. Maybe we'll go from 211 to 235 on earnings. I'm really hoping this could have like an Oracle-like move, maybe announce some deals, show a lot of growth in AI compute, and then see if this can start to break out over 250. I do have a very large position in the Robinhood Challenge account, so putting a lot of eggs, putting our money where our mouth is. If we can actually see it beat, I'm going to be holding a lot of risk through earnings and hoping that we can start breaking out to the upside, and that will be a main driver of how we get to 50K in the port. And then nbis, I might even be throwing more money there just because it has had that drop. So that's Amazon and nbis, kind of like AMD, nbis, Amazon. You can't really go wrong with any of those. Unity Software now has had a bit of a pullback. It had a retracement, right? So really most of this move was driven by a lot of out the money or near in the money call option flow. We had like millions and millions of dollars pouring into 43 calls for October 17th. We had like 40 and $50 strikes as well. There was just a ton of open interest across the options chain for Unity. And as price kind of stalled out here, you need more and more buyers to continue a bit higher. But as it stalled, people started to capitulate. The dealers who hedge against, right? The dealers who are hedging shares, right? They buy shares of the underlying because they are short the calls that retail is buying, or maybe even institutions that are buying call options. Since they are short, they have to remain delta neutral, and so they buy shares of the underlying as their price increases. But as expiration approaches and there's a ton of calls that are out the money, as expiration approaches, dealers start to sell off those hedge shares into expiration as they are out the money. And we had a pretty big capitulation on Unity during this time. Now, it is trying to break out of this downtrend. Obviously, like, the Trump news wasn't helpful. We had another drop, and then on Friday it actually went green, surprisingly enough, when most of the other speculative stocks were down. I think this was a bit of a washout of all that option gamma and dealer hedging, and now we're going to probably see a bit of a relief bounce here this week. Hopefully the market can stabilize and Unity can start breaking back over some of these resistance levels and flip those to support. 38.92 is a pretty key level. Also get us back over this previous trend. And if we can do that, then we definitely can trade back into this 41 to 47 range, maybe see a bit more momentum. And then obviously, of course, when it comes to earnings, that is going to be a potential catalyst as well. Now, Unity did have some layoffs. It looks like just this week, some people got laid off and were posting about it on LinkedIn. This was a staff technical artist. They also talked about like a YouTuber getting laid off. I actually think that could be bullish for the stock because they are more focused on vector, which we've had a bunch of very positive client testimonials, like Uprise doubled their revenue using Unity's level play. The downgrade that happened early in the week that contributed to the downside was actually by a one-star analyst. Funny enough, sometimes analysts, who knows who's pulling their strings, but they'll actually give like a sell rating on a stock because maybe their clients are short the stock or they actually want to buy it for cheaper. So they, who knows really, like, you always can't take analysts at their word. But even like Josh Chanley, who's been very vocal about Unity, says that AppLovin is starting to see a bit of a softening and vector is growing everywhere. So maybe that original speculative play that I thought Unity was with around Roaring Kitty tweeting and having a gamma explosion to the upside might actually be a fundamental turnaround story. And so a lot is going to depend on what happens on earnings for Unity. So kind of hold on a bit there. What I'm playing is mostly like March, April, and even June expirations, pretty far out the money, because if they do post a lot of growth in vector, this thing could start actually making a pretty strong move back towards recent highs and break over that $50 level. That's the next level of resistance. Now, quickly just going through some of these. I know I've been talking a lot, but Hims and Hers Health, Hers was announced that they're probably tracking towards a $1 billion revenue in 2026, which is very bullish for the stock. We actually saw a bit of a short squeeze happening on Wednesday, and that was driving the account much, much higher. We did trim out of some in our other portfolio. I wish I would have took out some in the Robinhood Challenge account, but we did have the news with Trump lowering the cost of Ozempic, and then I think there was also a bit of like a social media, people with their pitchforks going after Andrew, the CEO, because he was taunting short sellers. And then we had a bit of like a capitulation here, but short interest still remains over 38%. So I think that this can come roaring back. The news here was material, whereas most of the news here on the drop was immaterial. And so most likely this drop here was pretty much a combination of everything that was going on with like nbis as well as Unity with option expiration. We had a big sell-off. I think that HIMS will most likely try to get a bounce back here over this 52 level. If it can't, 46 is below. I think that's a pretty good entry, especially on shares. They're very long dated leaps, or even like Q1, Q2, because there's still a lot of potential catalysts here, especially around earnings, and then maybe even the closing of the Zava acquisition, which helps expand into, I think, Italy, Ireland, and another location in Europe. So it's going to establish HIMS and hers brand in Europe. And then, of course, they are rolling out the menopause, and then potential for peptides later on, since they did acquire a facility in California for peptides, and there hasn't been an announcement yet on that. So really still bullish on HIMS and hers, even at like 11 billion market cap with all the short interest that still exists. This is more than likely going to at least have a breakout towards all-time highs, and probably break all-time highs sometime over the next 3 to 6 months. I'm probably going to die in that hill, so we'll see what happens. And then Target, like we've been talking about this one, this is the ex-dividend flow play. We did recover really well. Small caps are holding well. XLP is holding well. Consumer staples actually hold up pretty well in volatility. And so we had a bit of a retracement here. We actually made a little bit of a new high here, but we're trying to get through this low volume node. So you have like a low volume shelf between 90 to 91.5. Once we get through that, it'll start to pull itself into this higher volume shelf where more buyers and sellers have done business. We have a very small gap here at 95.42. I'll probably start to take some profit there. I have mostly short dates, right? So I have like November 7th and 14th and the 21st. The 12th is the ex-dividend, so it will most likely drift higher into the 12th. And then, of course, on earnings, the 19th, you know, if you want to hold through that, you can. They might post positive earnings, since like Pepsi, Costco have doing well. Then like Walmart, maybe they'll announce a partnership. There was also PE buyout rumors. So there's a lot of potential catalysts here for Target. Maybe they'll partner with OpenAI as well, do something around AI. That could be another little catalyst here to get like a 2 to 5% swing. But ultimately, like if I was looking, if somehow this does take off a lot higher than 95 and get through that gap, the next gap here is at 101, and I'll probably be completely out of the position at that point, because this area is going to act as a level of resistance. So we'll see how that plays, but just holding strong on Target. Grab had quite its downfall. It actually broke back down into this previous gap that it ripped through. And so it really needs to hold this area, or we could see another trip back down to low $5 range. I'm hoping to see it bounce here back over 572 and then make that run again at 661. A lot less volume here on this drop, so hopefully we start to see some positive price action here. And then NEO, they had like an investor lawsuit. It broke the uptrend. That was probably expected at some point. I've sold a bunch of covered calls on NEO through the remainder of the year around like this $7.50, $8 level. Nice little hold here, 638. Really what we want to see is no capitulation lower towards 570. Kind of chop out here in this range, maybe form a bull flag, and then try to start getting through $7 and $8 again. But this one also is going to come down to earnings as well. Zeta, same play here. It came back down to that gap. Everything's in these smaller tech growth companies have fallen in the recent weeks. Just a lot of people getting, I guess, a lot of speculative traders getting washed out. But really would like to see it hold this gap here, right? This is the earnings gap from back in August. If it can hold that gap, that would be bullish. If it starts to fill down, that's pretty bad. We're probably going to make a trip back towards $16.20. But if we can get back over $17.80 and then start to push here towards $20 and then try to break out of this upper trend line that we failed to test, we didn't quite make it there. So I would like to see us get through there. That's the low volume node at 2273. That's a pretty good profit taking area. The CEO is very happy about Zeta Live and Investor Day. He's on CNBC all the time. I think that Q3 earnings are probably very, very good. They just had the chain smokers. They had flying drones in the sky, like doing different images like we were in Beijing or something like that. So I think they had like a really solid Q3, benefiting from AI. They just rolled out Athena, which seems to have, at least initially, a lot of good features around drawing insights from these different campaigns for marketers. So maybe that is like a very bullish catalyst for more and more customers to use Zeta's products, and we could see that show up here. They are growing very rapidly. Would like to see a bit more margin expansion, especially around gross profit. So if they can show margin improvement, show revenue growth, we're definitely going to see a move here, but they are spending a lot of money on the chain smokers. So we'll see what happens there, but I am still very bullish, holding tight here. I think we can definitely get that move towards 22. If we get that breakout, then definitely going to start seeing a bit more of a push here towards 25 to 27, maybe by Q1. Snapchat, they are going to monetize memories. Those are these memory storage plans, which is a very big cost to Snapchat. So like Snapchat actually has good revenue, over $5 billion, I believe. Let's see. Yeah, 5.64 trailing 12 months revenue. So they do have a lot of revenue. The problem is their cost of revenue, right? So like around hosting and storage, that is a big cost driver. And they are now going to charge users who have a lot of storage to keep those memories saved on Snapchat. And that is going to either be a revenue driver or a cost savings driver. So both of those are bullish for Snapchat. Once this starts to be realized and become material, that is going to be very bullish for the stock price. They do have a lot of stock-based compensation. So really on earnings at the end of this month, I'm going to hope that they announce another like $200 to $300 million share repurchase program, because there's about $1 billion in stock-based comp over the year of 2025. And so if they do 250, 300 million per quarter, that kind of just like washes out all that stock-based compensation, which hurts the stock price. So we did have like a fill here of this gap that formed on earnings. We rejected. Now we're starting to consolidate. What we're really looking to see here is like a hold of this 760 level, right? So we had a breakout over that area. We came back, retested it. We're retesting it again here. Would really like to see this push back towards 831 and then push back towards this gap and fill it completely around 930 to 940. And then the next level of resistance here is right around $10. Ultimately, because of all their revenue, there's tons of volume here because people are speculating that Meta is going to buy them. I don't think that's actually going to happen, but I do think that just with this plan alone, that is going to start showing a lot of margin improvement, more dollars to the bottom line, and that is going to be a bullish catalyst for Snap's price over the long term. I definitely think we can push towards $10, $11, $12, even try to get back up into this $13 range here in the next 3 to 6 months. But if you're looking to play this a bit safer, especially with earnings, it's always a coin flip. It could go up, it could go down. But if you just zoom out far enough, like this is trading pretty much at all-time lows at this point. All the trading up here was unwarranted. This was all just like bubble stuff. It should never have been up here, and I actually like shorted it down there. But Snap at these levels, I could definitely see it pushing back towards that 10 to 12, 13, even potentially up to this 17 range, right? Like we weren't trading too long ago last year around that level. So if we can show improvement in net income, that's going to be really bullish here for Snapchat. Now, DaVita, we've been in this one for quite some time. We do have some January as well as March contracts on this one. It's been a bit weaker than I've expected. Really, I think that now that it's kind of at the lower end range of this bull flag, it is a solid play to try to get back towards that 133 resistance level and then push towards this upper trend line around 146 to 147. And this is a bull flag, so hopefully it can break through there and start to get towards 159 to 160, retest this big gap that still exists. So that's really what I'm looking for, DaVita. I'm kind of holding tight on the contracts that I have. The theta is starting to increase, so I might have to roll on these contracts, but I'm hoping that it posts good earnings here. in the next couple of weeks at the end of the month. So we'll see what happens with DaVita. And then EOSE, these are like some smaller plays. EOSE is having like a crazy breakout. This is kind of tied in that neo cloud AI data infrastructure space because they need energy. They need batteries to supply these data centers, especially if there's any sort of outage or if it's not stabilized. Like these batteries are like that backup generator that keeps the data center running at full capacity. And so EOSE is seeing a ton of growth going into the next year, like you saw the graph earlier. Fluence Energy is also an interesting one. This one has like the most capacity deployed already. So really what I would like to see here on Fluence is a break of this trend line, right? So it came up and it retested that area. It failed to break through. Once this gets through, we could definitely see a pretty strong parabolic move. I think this one also has a decent amount of short interest. You can double check on that one for me, but same thing with EOSE, right? So like these stocks are starting to run. They've run up a lot, so it is very risky, but it's definitely worth like a speculative play if you are bullish on the industry. And then Willow Lane Acquisition Corp, this is buying Boost Run. Right now it is trading really low. I think that this can make a move towards $20 and then we'll see what it converts at. I can show you one last thing here. So this is CoreWeave, nbis. So Boost Run. They are going to see a lot of growth in 2026 just with like their revenue. And you can see here that it's trading at a 3.4x multiple compared to like nbis and CoreWeave. So this is definitely a smaller player. I don't think a lot of people have caught on to this one. It could definitely see like at least a 50 to 100% move on the underlying. So I really like WLAC. I just have like a bunch of shares on this one. I might even add more to this position just because I am very bullish on the industry. So that's really it for this video. I know it was a long one. I hope you enjoyed. Make sure you guys like, subscribe, join the Discord if you want to participate in the giveaway. And I'll see you in the next video, guys. Peace.